All right, quick update to a story that's been making headlines. OpenAI CEO President Sam Altman has been found not liable for breaking contracts he made with Elon Musk when they founded together the startup. Musk accused Altman of unjustly enriching himself and others in the process of building the company. We know those two men have been at odds. Of course, OpenAI is not publicly traded yet, and Tesla shares are down just a little bit. Meanwhile, there are two questions that are indirectly correlated. One about household debt. Now, we see it's edging just a little bit higher. You add on to that gas prices hovering at about 4-year highs, and many are wondering if the U.S. consumer is healthy enough to justify the stock market rally. Now, considering that the top 10 stocks in this market are responsible for 87% of this rally, many people are wondering just how healthy the rally itself is. So let's bring in Chris McMahon, CEO of Aquinas Wealth Advisors. And Chris, you put out a piece and you had two restaurant stocks in there. You had McDonald's and Shake Shack. And, they both are ugly charts. But I'm wondering, is it an indictment or is it a reflection of consumers, or could it actually also just be like we're not eating burgers anymore?
It's a great question. I think it's really a reflection of two things. The bifurcated economy. If you look at Capital Grill, all these other ones, Del Fresco, they're up 12%, 8% year to date. So people are eating red meat, but it's that bifurcated economy. I think the working folks are really suffering in this economy. We're starting to see, I think, a little bit of that either AI layoff or AI, that's the cover story to make these layoffs. So people are hurting, interest rates are high. So it's really we got to hope that Worst does when he's able to, make some cuts.
So could this help him make the argument then? Retail sales came in better than anticipated.
Yes.
Of course, adjusted for inflation, retail sales haven't done anything, but they haven't done anything for years. Could he actually use that for leverage, you think? Because he's got to do some serious arm twisting.
Yeah, I think the president will certainly help him, and at all costs, he won't look to oil price. He'll say, look away from those oil prices. Right. But I think we need to see at least, I think it's going to be relatively quick. I think within 30 days of this thing ending, people are saying it might be 6 months or 8 months. I think within 30 days of this thing ending, we got to get oil prices down. And once we have oil prices below maybe 80, I think we absolutely could see hopefully 2 cuts by the end of the year.
A lot of criticism about this rally, right? Yes. So you've got 10 names, 87% of the move, right? NVIDIA, Alphabet, Micron, Broadcom, Apple, Advanced Micro, Amazon, Intel, ExxonMobil, and Cisco. Is that okay with you? Listen, for me, I think what people don't realize, there's always just a handful of names. Now, I don't think it's ever been this pronounced,
sure,
but there's always typically just a handful of names doing the heavy lifting.
Yeah, maybe the dispersion is even greater this time around. Right. Does it bother me? Yes. Does it keep me up? No, because I think what's going to happen, I think likely we're going to see those numbers on Wednesday. Unfortunately, we're clinging to those numbers so much, but that Wednesday announcement of NVIDIA, I think is going to drive these prices and continue to keep this thing rolling because they keep blowing it out of the water. I think you've said it so accurately. We're not sure even if they blow it out of the water what that does to the stock price, but I think there's opportunity, particularly as if you take those 10 stocks out, what happens to the market? It's up 5%. There's money to be made in large cap stocks.
So you're kind of licking your chops to do some rotating here.
Yeah, absolutely.
You also that maybe it's time for some of the PE ratios of these semis are just a little bit high. Now we always kind of talk about Micron, which is like single digits, but Broadcom 23%, Intel 71%, Texas Instrument 34%. You think they can give up some of that and be okay?
I think we can have a 20% adjustment and be fine by the end of the year. I think, SOX was at 58 times PE ratio, and when it compared to the weighted S&P at 20 times PE ratio, I think there's some room in there to give that back, let everybody take a breath, and maybe, I think, disperse their assets across regular non-top 10 stocks.
But you are making an exception, it looks like, for KLA Tencor. What makes KLAC so special?
The world has lost its mind. Everybody said it. Huang was he did a commencement address at CMU last week, and he said it's all about memory and it's all about storage. He told those kids at Carnegie Mellon, don't worry about your engineering degree, go learn AI is what he said. Yeah. And who's going to supply this stuff? We think certainly we think they're a unique position, and they're undervalued. They're underperforming compared to the sector.
I had a chart I started the show with all these dots that represented 8.1 billion people, and like just one little red dot is where it's already caused all of the bottlenecks. Imagine what happens as this is pushed out. So one other area then, because people are watching now, they're saying, okay, if I start taking profits on some of these high flyers, where do I put the money? How do you feel about small caps, which were crushing it out of the gate. They crushed it in January. Things turned around with the Iran conflict, but they're acting better now.
We're not really rotating towards small caps right now. We're saying that if you take the Mag 7 out of those stocks, there's top at least 6 of them, and you say what's in the large cap area that's undervalued, there's too many things that are underperforming in that sector first before we have to pivot to small cap.
So here's the bottom line then is you're saying more or less stick with what works, but you think maybe a pause for the cause kind of thing. Does that mean you take a few chips off the table and buy the next dip?
Absolutely. I think it's a good time to maybe consider trimming those things. Get back to your asset allocation model. Great time never a bad idea to go back to your model, take 5, 6, 7% off the top, put it in cash, and see where we are in August. I think is a good example.
All right. Well, we'll have you back before August.
Thank you, sir. Thanks, Charles.